Hey everybody, what's going on? Don Cramer with the Cramer Group at Urban Nest Realty. Happy Friday to you out there today. Anyway, I apologize, we're a little bit behind here. Had a little technical internet web issues and wanted to get out there to you today because we wanted to bring some information out to you. So we got what I like to call the espresso edition of Coffee with Cramer and Colleen. Colleen sends her best today. She is actually out on a listing project right now. We've actually got a busy weekend too with a couple listings coming up. But that being said, we want to go over some news because whether it's good news, bad news, or whatever, and if it's got the data behind it to explain what they're looking for, we want to give that out to people tuning in because we feel that the more information you have, good, bad, or otherwise, that's supported by data, allows you to make the right decision on buying, selling, or investing in real estate. If this is your first time on Coffee with Cramer and Colleen, do us a big favor, hit the like button and comment below. Let us know you're here. If you're tipping a little espresso right now too, take a selfie of that. But appreciate you tuning in, and let's get started. So right now I've got an article here from a company called CoreLogic. CoreLogic is a large data firm in the real estate industry that aggregates data, collects data. They power a lot of the MLS systems out there, so they know what's going on with housing. I mean, for better or worse, you got a company like Zillow out there. They collect a lot of data, so Zillow's going to look at things and they're going to present some information as well. CoreLogic does the same thing, and they've come out with they've got a couple of indices. One is called a home price index report, and they've also got their market condition indicator reports and such. And they are talking about an update through May. Now, I know we're already into July, so some of these big firms getting the data together, putting the analysis behind it by their business analyses and their economists, it takes them a little while to get the reports out. But they've got this report here on home price insights through May of 2020 with forecasts for June 2020 and into May of 2021. And we're looking at things from a national level. However, we're also going to be kind of bringing it down here to the local level here in Las Vegas because this information, that's being brought up points out to Las Vegas specifically. So we want to make sure you've got the info. Now, so CoreLogic, this report, it is a review of home prices through May 2020, again with forecasts for the upcoming month of June, which we've got some numbers on that already. And then they do a year-out forecast of 2021, May of 2021. And they're going off of their data, and they, like I said, cover a lot of the major metropolitan areas. Now, let's start off with May 2020 national home prices. Now, they stated in CoreLogic that May home prices nationwide, including distressed sales, foreclosure, short sales, things of that nature, increased year over year in the month of May by 4.8% over May 2019. Now, to give you some comparison, Las Vegas increased by 5% over May of 2019, year over year amount. So slightly ahead of the national number. And the other item that they note is that from May to June, they are thinking nationally in this initial report that June it would start seeing a flattening to a possible decline in home prices nationwide. Now, we don't have a nationwide number just yet, but we just did our June recap of the Las Vegas housing market, and we actually increased by 3.2% over May of this year. So to our all-time number of 325,000 median sold price. So we outperformed their forecast by a lot. I mean, they were showing a 0.1% decrease. We had a 3.2% increase. And to give you some context too, that was a 6.9% jump over June of 2019. 19. So again, our home prices, definitely outperformed. And a lot of that continues to do with a low interest rate level. While unemployment remains high, we still have a large segment of our population employed. We also have a retirement population moving into Las Vegas, which is, unemployment isn't as big a factor. And we also have people moving in from California where they have the cash equity to support either a cash purchase or get into a place that they want to at a payment that is affordable to them. So that demand with COVID reopening and the perfect storm, the great storm of low interest rates, has kept our housing market looking very robust from a pricing standpoint. Now, what they're looking to do, and this is the item where we're a little bit, a little concerning for Las Vegas, where let's keep our heads on a swivel and keep looking at things, is what could happen with continued unemployment and increasing COVID numbers, especially in Sunbelt states. Now, there's some anticipations from the impacts of the recession are starting to show, and that even though May was looking pretty good, home price growth, they're looking at basically stalling out in June and remaining that way through the summer here nationally. Now, again, we increased. June was a very strong month for us. July, a little too early to tell. We're only 10 days in. Most of the houses probably closing towards the end of the quarter. If I were to kind of look at it going forward, I'm probably seeing July maybe looking a little flat, especially after achieving a record number like we did. Do I see a big pullback? There could be a pullback of 3,000 to 5,000 median home price because part of it's our mix depending on what's selling. But where it's looking right now, I'd probably see us, either staying at the 325, a number somewhere between 320 to 325 through July and August. But we shall see. So they're looking at, with this in mind, being flat through the summer nationally, they're also at CoreLogic predicting a year-over-year decline in home prices of 6.6% by May of 2021. So if we kind of take the yield calculator out, and I think we were at right around 315, roughly, I might be off $1,000 there back in May. If we lost 6% nationally, or 6% here in Las Vegas off of that May number, we're looking at a 20,790 decrease, which is bringing us to a median price of 294,210. Now that's a pretty significant number, but again, we saw a little over 3% increase already in June. So again, this is a forecast. Their model could show some accuracy. We also may be off a little bit, but we're going to find out as we get a little closer and keep moving ahead. Now, again, they're factoring in the elevated unemployment rates. Even though unemployment's gone down, both nationally and locally, unemployment in Las Vegas still remains quite high. I believe the latest numbers still show us well above 20%. I believe somewhere around the 24% number. Nationally, we're somewhere around the 11 percentage point number. Now, that is also then being exacerbated by the spikes in COVID-19. When we have a report just like we did yesterday with the governor stating, bars only will have to close down for the interim. Food, bars that still serve food have to shut down their bar facilities, but they could still serve food. We're kind of reducing some of our business footprint. However, they're trying to do it to maintain the ability to treat people in the hospital loads and not overwhelm the hospital system. So again, we may be going through a period of time where we may have the COVID-19 spikes going up, again, causing more friction even into our housing market. But we're going to definitely keep a very close eye on that. Now, in this report from CoreLogic, they have indicated markets to watch and really keep an eye on. that they feel are at risk of decline. And of the top markets in the United States, the top 50 metro areas, they look at some of the markets as being metropolitan areas as being overvalued at 39%, so rough just under 40%. So if you look at the top 50, 40%, so that's 20 markets, just about 20 markets there, while 24% are undervalued and 37% are normal. Now, those markets that they are concerned about that have a high possibility of dropping include areas such as Prescott, Arizona, Lake Havasu, Naples, Florida, Destin, Florida, and then in market Daphne, Fairhope, Foley, Alabama. Now, and they're stating here that those those sort of southern states, Sunbelt states, like Arizona and Florida, because of COVID and the impacts with their spring and summer tourism markets, unemployment, could have that downward effect on housing market prices over the coming year. Now, when we look at Las Vegas specifically, they're also factoring in that there could be definite hit to Las Vegas and then comparing it against other markets. Now, in Las Vegas, they're looking at Las Vegas as being one of the overvalued markets, and I could probably agree with as to why. Well, we just had a record price number there, and they put a lot of factors into is this overvalued, undervalued, versus a market like San Diego. Even though the median home price is $600,000 per our good friend Justin Filler, who was on last week, that market is still in check with regards to employment, wages, things of that nature, and so they're looking at that market as still being in pretty good shape. Now, they're looking at a market like Las Vegas because of our tourism-based economy. They have an expected decline of 20% by May of 2021. Again, let me repeat. A 20% decrease from May of this year, 2020, to May of 2021. That's a big number. In their April report, they were looking at a 7.3% decrease. Now they've kind of increased that by quite a bit. Now that we're going to be tracking that extremely closely, because if we're looking at the May number roughly, at 315, a 20% decrease, that's roughly $63,000. That's going to take us into the 260, 250, high 250, 260 range. So that's a pretty big drop. Now, is that a big drop as the Great Recession numbers? Not really, because we were in that point in time, we were in some of our parts of town where 40, 50, 60% valuation drops. So while 20% is still a healthy number that to be concerned with, we also can look at it this way. One, housing is not driving this number down. It's being driven down by unemployment. It's being driven by the coronavirus rates of infections and hospitalizations and things of that nature. If we turn the tide on unemployment, or we turn the tide on coronavirus, or a combination of those two, that number of the 20% drop may not materialize. It could also go more, but again, this is a forecast. Now, that being said, we want to make sure this information gets out there, because we want to take this data from CoreLogic, which is important in the real estate industry, and compare that against other groups and economists in the housing market as to where they're seeing things going, especially in Las Vegas. Because housing in Las Vegas is big, it's important to us. We went through so much growth, but then we had the gut check of the Great Recession. So we're living with very recent concerns with the housing market. So when this news or information gets out there, we want to make sure you've got everything you need to make the right decision. Now, one thing is we are having conversations with buyers, sellers, investors, and there's different conversations to be had. Now let's take the buyer perspective. Now, from a buyer's standpoint, there are probably, it's more of a needs-based situation where one, okay, hey, they're in a good position with employment, but they may need to make a change because they need additional space in their home. That's becoming a big driver right now. So people that need the additional space for homeschooling, because it looks like, at least through the start of the year, Clark County School District is looking at a mix of staying at home and in-class schooling. So having a dedicated space for the kids of the family to learn is going to be important. Secondly, too, also those that are employed may need to be doing more work from home. We've been going through a lot of that here with COVID already. That may carry on well into this year, into next, and maybe even beyond, as businesses maybe even reevaluate the need for office spaces for their teams. Excuse me. So, that being said, in addition to the garage, the kitchen, the family room, number of bedrooms, additional den space, additional home kids office space, additional space even for workouts, because there's concerns about, workout environments, things of that nature are driving some of that demand to say, let's get into a house that better fits our family needs. Number two, on the buyer side, we're still dealing with historically low interest rates. So right now, your buying power is still really, really good right now, as even compared to a year ago. I mean, we're seeing interest rates for 30-year mortgages around 3. We're even seeing some of those still below 3. So a lot of people are using this opportunity to say, let's get into the house that we need because our borrowing costs are so low. Next, when people are buying houses, I would be factoring in, and this is a big question we ask a lot of just about all of our clients. How long do you expect to stay in that home? If you're planning to look, I only need this place for a couple of years because I want to flip it or sell it and move out. Well, we want you to make sure you have this information in hand, because you may want to think differently. Now, if you're going to be in that house for 7 to 10 years and you want to enjoy it for 7 to 10 years or maybe even longer, because this is the right place for you, you can afford it, the job's in a good spot. Okay, even if there's a 20% hit to the price, if that came through, most likely over time, the trend would be with demand, appreciation, things of that going in that direction, you would recover that loss and probably home appreciation. If we look at, again, the Great Recession, over 10-year period, it took a while, but we recovered most of our losses from there. In fact, now, our median home price is the highest that it's ever been. So again, if you're looking long-term wise, that 20% impact, while it may be there, would only be there during a portion of the time when you lived in the house, not when you sold the house. So that's from a buying standpoint. From a selling standpoint, if you're thinking, hey, this is not the house I want to be in right now, and I bought it at the right time, or I bought it at a time where I've got great equity in it, well, you know what? We're having the conversations with those sellers right now to say, okay, demand's so high. Your house, if we've got a house that's especially turnkey, we would be able to sell it pretty quickly, especially when you see how much inventory we have. We only have about 2.1 months of inventory available right now. Sell it quickly, maximize your equity out of the property, and then either A, get into the home you want to be in, Or B, in some cases, some people are renting and want to kind of take a wait and see approach. So those right now, with a couple of clients we have coming up right now, that is being done. That is being considered. It's about sell my home now, maximize my equity. I want to take a little bit of a break. I'm in a position to do so, so I may want to rent for a year, see what's up. If prices go down, great, I'll be able to buy something on the low. Or they're looking at like, look, hey, I can get my equity out. Interest rates are still low. Get into that dream home now because I've got that equity to make that happen. So that's from a selling side. From an investing side, we're kind of taking a little bit more of a picky, choosy standpoint. So if the house looks right from a pricing standpoint, you're looking to have a tenant in there, especially after we move out, the forbearance, the mortgage eviction, all that the tenant eviction situation, moratorium into a more normalized rental market. If it looks like that rate of return looks good for you and you want a cash flow, okay, great. Some people are going to go, you know what? Hey, we're going to maybe get 1 or 2 properties now, but we're not going to go put all our eggs in one basket. We're going to also kind of do this a little slower, kind of take a little wait and see approach. If it does go down, great. We'll have a little higher rate of return. If it doesn't go down, if the home prices don't go down, then you also go, okay, well, we'll buy at that point in time, put somebody in. So again, it's a from an investor standpoint, it's like a market. At some point in time, you might buy stocks at a certain price point. If it goes down, you may want to buy some more of that same stock to cost average it down. Or if it doesn't and it kind of stays flat or it kind of goes up, you may want to buy a couple more shares because it's appreciating. Again, that's how an investor's looking at it. Just again, similar to other types of equities. So again, while the 20% drop year over year is not rose colored, and this is not looking at things with rose colored glasses, but this is looking at our market from a clear numbers point of view, informational point of view, and factoring that in with other things. We're not going to let just one article by CoreLogic drive our complete decision making. We're going to factor this one in with other data we have coming in and other trend lines, other pieces of information, other pieces of news that will paint the right picture. And that is what our job is as a real estate advisor to our clients, is to pull that information together, present it out so they have the best information to make the right decision based on their needs and based on what they want to do with buying, selling, or investing in real estate. Now, again, this is, like I said, kind of the espresso edition. We appreciate people kind of tuning in today. If you have questions about this article, I'm going to put a link to it in the post so you can see the information. And if you have questions about it and want to reach out and discuss, do us a big favor, put that in the comment section or message us. Also, our contact information is on our Facebook business page. Also, we're going to upload this to YouTube as well later on. So if you're checking this out on YouTube, reach out to us because we're here to answer your questions on buying, selling, or investing in real estate. And we want to make sure you have the news that you can use to make the right decision. So on behalf of Colleen Schaefer, I'm Don Cramer. Thanks for tuning in to, like I said, the Espresso edition. We've got a busy weekend coming up. Hope you guys have a wonderful weekend. It's going to be warm out there. Do a big favor. Make sure you're being safe. Got the family members safe. Got the pets. Got the furry ones safe here during warm times. And hang in there. We're all one big community. We're all going to work through this together. And again, as we get more information and more data from other sources about our housing market in Las Vegas, we're going to get that out to you. Because again, more now than ever, your real estate experience matters. So we wish everyone a wonderful day. Take care. Till next time. Bye-bye.